Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Nevada Copper stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Nevada Copper is a junior copper miner. Just to give you a little background on the types of mining companies, there are two levels of mining companies. The first is the junior miner. Some people refer to junior miners as exploration companies. It raises money from investors or other mining companies to look for mines that contain gold, silver, or other precious metals. Once they find these mines, they usually sell the rights to a larger company or the entire business gets acquired. Although some junior miners will spend the money to extract the metals from the mine, it is much riskier investing in a junior miner because they may never discover anything to mine, which happens more often than not. The flip side is when they are successful, the stock blows up and can 10, 20, or 30x your money. If the company's market cap is under $500 million, it is probably a junior miner. We're looking at a junior miner in this video. The best way to invest in a junior miner is to try to figure out which one is the closest or has the best chance of finding a mine with lots of metal in it. The second level miner is the major mining company. These companies have lots of experience, are well capitalized, and are actively mining different commodities and selling them. Valuing a major miner is not easy, but it is doable. You need to look at the mines it has and the amount of product it can pull from those mines and gauge the future price of those commodities. When you invest in a commodity-linked business like a miner, the company is at the mercy of the spot price of the underlying commodity. You can do all the analysis in the world, but if you are invested in a copper mining company and the price of copper drops 70%, that company's stock will tank. This company does have its first mine in production, and it is getting it prepped for extraction. It's also working on an underground mine, and the benefit of this is the capital expenditure charges will be a lot less than a traditional mine. Copper supply may start to suffer as demand keeps increasing. 43% of copper is used in building construction, 20% in electronics, 20% in transportation equipment, 10% in consumer products, and 7% in machinery. Copper is more prevalent in EVs. A conventional car has 18 to 49 pounds of copper. Hybrid electric vehicles have 85 pounds. Plug-in hybrid electric vehicles use 132 pounds. Battery electric vehicles contain 183 pounds. That's 5 to 10 times as much copper as a regular car. And as we get greener as a country, we're going to also want electric buses. A hybrid electric bus contains 196 pounds of copper. A battery electric bus contains 814 pounds. The greener we get as a nation and the greener other countries get as well, the demand for copper will skyrocket. There's an immense amount of copper used in wind and solar infrastructure. The company is headquartered in Reno, Nevada, and was founded in 1999. It started trading in 2006 and can be found on the TSX, Pink Sheets, and Deutsche Börse. Let's get started with the model. This is a micro-cap company, 102 million market cap. They're trading at 55 cents a share, and they have 185 million shares outstanding. Let's look at the financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. The company has negative free cash flow and negative net income since they're pre-revenue. This is the company's income statement. The top line is the revenue of the sales, which is 0. Below that is the cost of revenue, which is pretty low since they don't have any revenue coming in. They do have a good amount of operating expenses. It was 10 million in 2018. It's 6.2 million in the trailing 12 months. Here's a breakdown of their operating expenses in 2020 and 2019. So consulting and remuneration was 1.4 million. There's 2 million in public company expenses. Administrative expenses is payroll. Then they have professional fees of 4.2 million. So they have consultants and professionals that help them because it's not easy to look at a mine and figure out how much copper is in that mine. The only way you really know is if you break the mine apart and process it. But of course, that takes a lot of money. So you need experts to use certain machinery and tools to try to figure out how much copper is in the mine, because the company needs to value the mine so it knows what to sell it for, or if it should invest in machinery and equipment to start extracting from that mine. And they also have 1 million in stock-based compensation. This is when a company pays its employees with stock. but this is a non-cash item, so we add it back on the statement of cash flows. They have been adding debt recently, so they paid $841,000 of interest on their debt. The trailing 12-month number didn't pick up in Yahoo Finance, but it is higher than $841,000. And the bottom line of the income statement is their net income, which of course is negative every year. This is the company's statement of cash flows. The top line is operating cash flow. So you can see how much better their operating cash flow looks compared to their net income. Because operating cash flow is net income converted to cash. Because there's lots of non-cash items that are on the income statement. You have to add those back on the statement of cash flows. They do spend a lot in CapEx, nearly $123 million in the trailing 12 months, because it's not cheap obtaining the rights to certain areas, also buying the equipment and machinery to try to figure out how much copper is in the mines. And they also mentioned they're getting ready to start operations on a mine, so part of the CapEx may be some of the equipment to start that. So of course they have negative free cash flow each year. They're using debt and equity to fund their business. They issued $185 million of equity in 2018, then $30 million, then $30 million. Every time a company issues equity, it dilutes the current shareholders, making your shares less valuable. They're also adding a lot of debt each year. They added $156 million in 2019. They paid down nearly $100 million, so they added about $50 million that year. And they added about $80 million in 2020. It's usually hard for companies to obtain financing when they have no revenue coming in. But they're probably showing the bankers or the investors that the mines are getting close to extraction, and the mines have a lot of copper in them. This is the equity section of their balance sheet. They have $390 million of equity. They raised $540 million from issuing stock, and they lost $180 million from running their business. Let's look at the capital structure. They have $391 million of equity, $224 million of debt. They're 64% equity, 36% debt. And their weighted average cost of capital, which is a blend of the cost of equity and cost of debt, is 8.34%. And that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated terminal value, which is all cash flows past year 4. That's $1.9 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.1 billion. We divide that by 185 million shares. We get a calculated stock price of $6. They're trading at 55 cents, so they're trading at a 91% discount. It's a really strong buy according to the model. According to their most recent presentation, they have one producing mine that they say can generate 77 million pounds of copper per year. Then they have another mine that just completed their permitting process that's not in production. They expect this mine to generate 200 million pounds of copper per year. I assume they'd have no revenue in 2021, 22, and 23. And then they would generate 277 million pounds of copper in 2024. At $4 per pound, that's $1.1 billion. So that's how I got the $1.1 billion of revenue in 2024. The price of copper has gone up a lot, and I think by 2024, it's going to be more, like $6, $7. But I'm just keeping at today's prices at $4. And there is a chance they develop other mines and generate even more copper. And there's even a better chance that these mines don't generate as much copper as they're saying. Just because the surveyor or exploration company said the mine can generate 200 million pounds per year doesn't mean that's actually the case. That's just an estimate based over their expertise. And also, it could cost a lot of money to pull the copper from the mine. Say, for example, it costs $3 per pound to pull the copper from the mine. If the price of copper fell below $3, this company could not sell any copper because it would lose money. Right now, they are pulling copper, but they have no sales. There are a lot of companies that pull copper, gold, uranium, and they don't sell it. Sometimes they wait for the prices to go up before they sell. Like for instance, there's a lot of oil under the sea. Say it costs $200 to pull a barrel of oil from below the ocean, and oil never costs that much, so you're never going to pull that oil. So obviously the market doesn't feel this company can generate as much copper as they're saying, because the stock price is still 55 cents. You have to make the determination, can this company generate as much copper as they're saying? I'm not implying that they're lying. It's also possible the surveyor overestimated their projections. The stock actually did a 10-for-1 reverse stock split today. I prepared my Excel file yesterday, and then I had to redo my Excel file because the numbers changed. The valuation is the same, just some of the numbers have changed. On Simply Wall Street, they still have the stock price before the stock split. Either way, it's the same. They're saying the stock is really overvalued. So you can see the stock has not done too well since it started trading in 2007. It looks like it peaked around $6, but it's at a pretty low point. The longer the company goes without pulling any copper or without selling any of its mines, the lower the stock price will go. Most of these junior miners end up going bankrupt because if it takes too long to find copper or whatever metal you're looking for, investors will stop investing in your stock and you'll run out of cash and you can't pay the interest on your debt and then you'll be forced into bankruptcy. So you can see here they did a 10-for-1 reverse stock split today. This article was dated 9/3. It mentions the split will occur on 9/21. And their stock is a bit volatile. They have a beta of 1.74, so it moves a little less than 2 times the market. It's gone down 40% in the past 52 weeks, while the S&P is up 31%. The 52-week low is 5 cents. These are pre-stock split numbers, and the high was $1. And the stock is trading below its 50-day and 200-day moving average. 1 to 2 million shares are traded each day on this stock. Pretty much all the shares outstanding are on float, and only 14% are held by institutions. And this stock is down a lot the past year, 3 years, and 5 years. But once they start extracting copper, the stock price will go up a lot. But people keep waiting. It still hasn't happened. Analysts are very bullish on this stock, projecting their earnings to grow 77%, their revenue to grow 58%. If you invested $10,000 into this company 10 years ago, you'd have $128 today. The biggest shareholder are Apollo Investments, Castle Lake, BlackRock, and a couple other smaller investors. Let's look at their financial ratios. We can't look at the PE since they have negative net income. They have no revenue, so we can't look at the price to sales ratio. And their price to book is below 1, it's 0.3. When a company has a price to book below 1, that indicates it's worth more in bankruptcy than an active company. This implies if the company filed bankruptcy today, each shareholder would get $2.11, even though each share trades for 55 cents. The reason their equity is so high, so much higher than their market cap, is because they have $738 million of minerals PP&E. So the value of the mines that it holds is worth $738 million. It's your job to figure out, can they actually sell the mines for that much money? If they can, this is a great stock and you should buy it. But if they can't, then maybe not. And they have a current ratio of 0. I've never seen a current ratio of 0 before. They only have 10 million of current assets on their balance sheet and 265 million of current liabilities. So they're obviously going to be short. They're going to need some debt or equity financing to get through the next 12 months. But I think they'll be able to get financing because it seems like they're getting closer to extraction. So as long as they have something to prove, something to show where they will be monetized in the future, they should be able to get financing. The best way to look at ratios to compare them to companies in the same industry. I've done videos of 6 companies in the same industry as Nevada. And if Nevada has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. We can't look at their PE or price to sales. They have an amazing price to book. They have a terrible current ratio, a terrible ROE. They are lower in debt than the average company, and they're by far the smallest company on this list. So to summarize, I have them trading at a 91% discount, but junior miners are very risky. There's no guarantee they're going to actually get anything from those mines. That's why the stock price is so low and the market cap is so low. But if you can gather a lot of information and figure out if the company is really that close, and if the quality of the copper is that good, maybe it is a really good investment, but it is a big risk. But as you know, the bigger risk, the bigger the reward. I rank their free cash flows, revenue, and ratios 1 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.